Hey, welcome to another episode of Financial Theory. Let's talk today about stocks versus crypto. Which is better to invest in? Let's find out. Now, quickly, I just want to do a definition of each of the asset classes. When you buy into a stock, you become a part business owner. You own a small slice of the business. So if the business does well, generates money for you, it appreciates in your stock price, and also it can pay you some sort of dividend. So with cryptocurrency, there's only three cryptocurrencies that you really need to know, and that's Bitcoin, Ethereum, and Solana. So with Bitcoin, the main thing you need to know about Bitcoin is its main role is just to act as a store of value. That's it. Think of Bitcoin like digital gold. And some other attributes of Bitcoin: it has the slowest transaction speed, it has the highest transaction cost, and Bitcoin has the best security out of the three. Ethereum is essentially a decentralized platform. What a decentralized platform is, it's a platform that no single person, company, or government controls. Instead of one central authority running it, it's maintained by thousands of computers called nodes spread around the world, all following the same rules. So a simple analogy of this: centralized just means, for example, a bank, one company holds your money, sets the rules, and can freeze your account. Decentralized just means, for example, cash, no one controls it. If you have it, you have it. Ethereum works the same way. No company owns it, no one can shut it down, and no one can stop a smart contract from executing once it's deployed. So the network itself enforces the rules. So here's a quick table of the differences between the three major cryptocurrencies. You got Bitcoin, Ethereum, and Solana. Bitcoin, it's a store of value. It's very slow. The transaction speed is the slowest of the three, has highest fees, but maximum security. Ethereum is in the middle. It acts mainly as a platform. Moderate speed. Fees are in the middle. Not too expensive, not too cheap either. Security is good, not as good as Bitcoin, but better than Solana. So Solana is basically the same as Ethereum, except it's much faster transaction speed, low transaction fees, but its security is lacking in compared to the other two. Now that we understand a bit more about the three major cryptocurrencies, now we can actually just compare the stocks with the crypto and their past performance. So historically, crypto has won so far to this point. It doesn't necessarily mean that crypto will win going forward, but let's have a look at the numbers here. Over the last 10-15 years, Bitcoin has massively outperformed every stock, every index, or asset class. So many early crypto investors made 100x to 1000x returns. Quite incredible. So the broad stock market, the S&P 500, usually returns 10 to 12% each year over very long periods. Having said that, but if you invested in Bitcoin in the early days, so let's say 10,000 in Bitcoin in the early 2010s, it's potentially worth millions now. And 10,000 in the S&P 500 in the early 2010s, you'd be looking more at tens of thousands. But having said that, past performance doesn't guarantee future performance. So we will see if crypto can still outperform stocks in the next 10 to 20 years. All right, so let's look at advantages of stocks first. The first advantage of stocks is it's backed by a real business. So when you buy shares of Nvidia, Microsoft, AMD, you own part of the business, generating revenue, profit, and cash flow. Stocks are a lot easier to value. You can analyze revenue growth, margins, earnings, cash flow, competitive advantages. This makes future returns a lot more predictable than cryptocurrencies. The third point is that stocks have lower volatility. A stock falling 80% is unusual, but in crypto, it happens very regularly. The fourth point is that long-term compounding. This really belongs to stocks because the S&P has been a wealth compounder for the last 100 years, and I believe it will continue to do so in the next 100 and 200 years. Here are the cons of stocks. So the first con is that you have a lower upside. A $1 trillion company won't become 100x easily. The bigger the company, the harder it is to grow, and usually the slower its growth as the company gets bigger. Second con of the stock market, a more efficient market. There are millions of people analyzing stocks, so finding a huge bargain is much harder. The third con of stocks, slower wealth creation. Stocks tend to create wealth slower but more gradual, whereas with crypto, it can kind of skyrocket. It's like winning the lottery with cryptocurrency in a way. But with with stocks, they tend to be more gradual, and building wealth takes longer with stocks. All right, so let's look at crypto. Okay, the first pro of crypto, much higher potential returns. A successful crypto can double very quickly, 10x in a cycle, or occasionally 100x. That almost never happens with large stocks. Crypto has a far bigger upside. Okay, so the second advantage of crypto is that there's limited supply of cryptocurrencies. So for example, Bitcoin supply is capped at 21 million coins, but keep in mind, scarcity only creates value if people actually want the asset. So if there's no demand, perfect scarcity means absolutely nothing. For limited supply of cryptocurrency to increase in value over time, demand must grow at a faster rate than the supply shifts, or demand must stay constant while circulating supply actively shrinks. All right, so let's look at the disadvantages of cryptocurrency. The first major disadvantage of cryptocurrency is it's extremely volatile. So Bitcoin has fallen 80% multiple times, and many altcoins have fallen 90, 95, 99% over time. And a lot of these coins actually never recover. So that's a big difference between stocks and cryptocurrency. Okay, so the second problem with cryptocurrency is it's much harder to value. How much is one coin worth? Because the problem is there's no earnings to analyze. There's no cash flow to analyze. That's a huge problem. How do you actually value one coin of cryptocurrency? The third problem with crypto is regulatory risk. Governments can affect exchanges, stable coins, and crypto adoption. And that's one of the big keys as well. For crypto to actually have any sort of value, it needs to be adopted by the majority of the world. It's like with gold. Gold doesn't actually produce any money, doesn't produce any dividends or cash flow or anything. But along the history of humanity, people just agreed that gold became a standard in terms of preserving value. The same thing could happen with crypto in the future. If in the future there is worldwide adoption of cryptocurrency, then I can certainly see how it can actually have value. But in the meantime, for me, it's quite hard to actually see crypto as actually having any sort of value. But let's say in the next 10, 20, 30 years, if everyone starts using crypto as the default way of paying for things, then of course that will change everything. If that actually happens, then I can actually see crypto actually having some sort of value. But at the moment, I'll stick with stocks because crypto is not showing me that it actually has enough adoption to warrant its value. The fourth problem with crypto is it has a high failure rate. Don't invest your money into speculative meme coins. They're most likely scams and you're probably going to lose your money anyway. Just be aware of that. Just to sum up, it really depends what your goals are, whether you should invest in stocks or crypto. Let's just go through it right now. A useful framework would be this. If your objective, your goal is maximum long-term reliability, stocks win. If your objective is maximum upside potential, crypto wins. If your objective is retirement portfolio, stocks win because it's more reliable. If it's speculation that you're after, crypto wins. If it's predictable compounding, stocks win, hands down. If your objective is high risk, high reward, crypto wins. Crypto gives a much better potential upside than stocks, but comes with high risk, much higher risk. That's what I would personally recommend to you, is keep the bulk of your portfolio, the core positions in stocks and index funds. And if you want a more speculative play, go 5 to 10% in crypto. Worst case scenario, you lose that 5 to 10% in crypto, it's not going to destroy you. Whereas the stocks and the index funds will slowly compound your wealth long term. All right, so I hope you guys enjoyed this little video comparing stocks with cryptocurrencies. I think it's still an interesting asset, but in the meantime, I am just focusing, investing in my stock portfolio for the time being. I'm mainly a real estate guy, but now I'm moving into stocks. And once I've solidified my position in stocks, I will then actually start to look at crypto next. But it's very interesting because before this video, I honestly did not know that much about crypto, but reading up on it, it's really fascinating stuff. So I'm going to keep digging a bit more and just to find out a little bit more about it. So at the moment, stocks are running red hot at the moment. So we'll see if that trend can continue and whether crypto can actually bounce back in the next year or so. All right, so if you enjoyed this video, give this video a thumbs up, like, comment, share. I will catch you guys in the next video. See ya.